Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're covering some earnings results again, but this time we're taking a look at the conglomerate sector and taking a look at two of our homegrown local boys. That is Massy, the Massy Group, as well as Ansa McAL Limited. Now, both groups would have had differing results. Massy, in the main, growing its earnings modestly, while Ansa McAL did have some fallback in earnings for the most recently concluded period. Let's take a look at how both of those groups performed and what investors might expect in the coming months ahead. Turning firstly to Massy, well, the group reported an earnings per share figure of 24.5 cents per share, which was a modest increase of 1.5% over that 24.1 cents per share recorded in the prior comparable period, and that period coincidentally is it's 9 months of fiscal 2022 versus 2021. Now, positively, revenue from continuing operations did increase 13% from 8.1 odd billion to 9.2 odd billion. Operating profit after financial costs or finance costs increased from 565 to 620 million. Overall profits for the period improved 3.1% from 500 to 515 million, with profit attributable to equity holders after considering the impact to minority interests increased just at 1.5% from 477 to 484.5 million. So very strong revenue growth, and that did not necessarily translate into a one-to-one impact on profit attributable to equity holders. When we take a look at the profit before tax performance by segment, it was pretty good reading for Massy. Investors, Integrated Retail, their largest contributor to profit before taxes, increased just 25%, or a very commendable 25% rather, from 292 million to 364 million. Gas products also improved from 178 to 212 million in terms of contribution to PBT, a 20-odd% gain. And motors and machines, they're rounding out the top three of its largest segments, and focused portfolios increased from 83 million to a 135 million contribution, a 62-odd% improvement there. Financial services, just some modest improvement from 65 to 69 million. And real estate, with the closing of some sale transactions, improved from 4 to 26 million. But again, that's not a core portfolio. The three core portfolios for Massy are Integrated Retail, Gas Products, and Motors and Machines. When we take a look at Massy from a PBT by geographical composition or geographical contribution perspective, we can see that there weren't that many changes. Trinidad and Tobago in that red color remains a major contributor at 40.1%. Guyana growing in prominence at just under that 23%. Barbados 14% in terms of contribution to PBT. Eastern Caribbean 10%, and Guyana and others, Jamaica and others around that 5 to 6% range. Now, when we take a look at Massy's valuations over the past couple of years, we can see that it is, despite that growth in earnings, trading a little bit above its own historical price earnings multiple average of around that 10 to 10.5 time level, with a trailing earnings per share of 40 cents, using the most recently concluded figures, as well as some of last year's fiscal information. It is trading at a price to earnings ratio of 11.8 times, and the stock has, despite growth in revenues and a modest growth in earnings, actually declined just about 10-odd% on a year-to-date basis. So at a price of $4.70, and remember, Massy would have had that 20-for-1 split earlier in 2022, Massy is trading at that 11.7 times multiple, which is below the sector average of 16.4 times, but again, slightly above its own historical average, and with a dividend yield of around 3.1%, which is above the sector average of 2.6%. So with revenue growth in mind, relatively attractive valuations to the sector, but again, a little bit above its own historical valuations. And keeping an eye on margin pressures, as its profit after tax margin did fall a little bit. Bourse is going to maintain a market weight rating on Massy for the time being. Turning quickly to Ansa McAL, the group recorded diluted earnings per share figure for its 6 months ended June 2022 of 16 cents, an 85.6% decline from the $1.11 recorded in the prior comparable period. Like Massy, revenue growth was very encouraging, up 17.6% from 2.6 to 3.1 billion. However, that did not translate into profits, which were down just about 85% from 225 to 32.9 million. When we take a look at why that would have happened, in the main, it was a swing in performance, a significant swing in performance from that banking and insurance segment, which in the prior comparable period delivered PBT of 159 million in that purple slice there, and it has swung to a loss of 119 million, and that really is attributable not to actual realized losses, but changes in valuations, which would have passed through the income statement with new financial standards in place, particularly IFRS 9, and that would have really led to a paper loss and a swing in profitability on paper for the Ansa McAL Group. While manufacturing, packaging, and brewing, meanwhile, actually doubled in profits from 104 to 209 million. Its automotive trading and distribution segment actually increased about 52% from 50 million to 76 million. Again, the reopening of certain of the economy would have certainly benefited Ansa McAL handsomely in those particular segments, but with financial market volatility in the year thus far, it would have led to some weakening of the banking and insurance segment, particularly the performance of the financial services portfolio. When we take a look at the trailing earnings per share and price earnings ratio of Ansa McAL, we can see that it is a bit elevated at 22.8 times, and that most recently concluded first half of 2022, not really contributing on a trailing earnings per share basis, dropping that trailing earnings per share from 309 to 250, causing that slight elevation in price earnings ratio multiples. And that really is the story of Ansa McAL for the time being, despite a 4.5% decline price in its share price rather year to date. Ansa is trading at that price of $57 and that price earnings ratio of 22.8 times, above the sector average of 16.4 times, but again, offering a fairly juicy dividend yield of 3.2% versus the sector average of 2.6%. So with that revenue growth in mind, cognizant of those relatively high valuations and that those volatile financial markets, Bourse is going to maintain a market weight rating on AMCL for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 2Bourse, email us at invest@boursefinancial.com, and you can check out our website where all of our research is absolutely free at bourseinvestment.com. And however you choose to spend your independence holiday, please show some national pride. Let's all be a little bit proud of our country despite the many negatives that we can focus on. Let's focus on the positives, and we'll see you next time on the Bourse Report.